All right, so are you ready to really up your stock picking game? We're diving deep today into the CANSLIM method.
Yeah.
It's this system that a legendary investor, William O'Neill, created, and he used it to try to pinpoint these high growth companies way before
Right.
they even hit the mainstream.
Mm-hmm.
So
It's like having a roadmap to uncover those hidden gems, with the potential to really just take off.
get
We're not talking about just getting lucky here, right? This is like a strategic approach, a blend of fundamental and technical analysis.
Yeah, no, I'm definitely intrigued already.
Okay.
So let's unpack this acronym CANSLIM,
Yes.
and let's start with C.
All right.
Current earnings. Now, I know that strong earnings are important when we're looking at companies, but what are we looking for specifically with CANSLIM?
Well, we're not just talking about any growth,
No.
okay? We're talking about explosive recent growth. So imagine a company and their earnings per share or EPS have just jumped significantly in the most recent quarter compared to the same period last year, think 25% or more. That's the kind of momentum that really catches our eye.
So if a company's EPS was $1 last year,
Mm-hmm.
we'd want to see it at least 1.25 or higher this year.
Yeah, at least 1.25. You got it.
Okay, that makes sense.
Right.
But, one good quarter doesn't always tell the whole story.
Right.
What about annual earnings growth?
You're absolutely right. Consistency is key. So, make sure that we're not just chasing, a one-hit wonder. We're looking for that steady upward trend in EPS over the past, 3 to 5 years. Something in the range of 15 to 20% or more year over year.
Okay, so a company with EPS steadily climbing from, say, $2 to $4 over a few years.
Yes,
That's the kind of consistent performance that gets you excited.
exactly.
Okay, but strong earnings alone, they don't guarantee that a stock is going to take off.
Right.
So what's the N factor that can really ignite a stock's price?
N stands for new, and this can be a real game changer. Think about it. New products or services that are disrupting the market. Or a dynamic new management team that comes in and they're turning the company around. Or strategic new acquisitions, opening up these exciting new revenue streams. It's that spark of innovation and change that often attracts investors and drives those big price movements.
So it's not enough for a company to just be doing well?
Right.
There needs to be a catalyst for that next level of growth.
You got it.
Makes sense.
Okay.
Now, S is supply and demand.
Okay.
And I know that that's a fundamental economic principle across the board.
Yes.
But how does that apply to the stock market specifically?
Well, you see, O'Neill, he really understood that scarcity creates value.
Yeah.
And he focused on these small to mid-cap companies that had a limited number of shares available for trading.
Okay.
Remember when demand outstrips supply, prices go up?
Right. Okay, so a limited edition pair of sneakers, the fewer pairs that are available, the more people are willing to pay.
Exactly.
So are we just looking for companies with a small number of shares outstanding?
It's a little more nuanced than that. He was particularly interested in what's called low float, meaning very few shares are actually available for trading.
Okay.
This can create a situation where even a small amount of buying can send that price soaring.
Okay, so that sounds like it could be really exciting, but also a bit risky, high potential reward, but maybe a lot of volatility too.
Yeah, you got it. Low float stocks can be a little bit like a roller coaster ride, right? They can shoot up quickly, but they can also plummet just as fast.
Oh, wow.
Understanding both the potential and the perils of low float is really crucial for this part of the CANSLIM approach.
All right, S check.
Okay.
On to L, leader or laggard.
Okay.
I have a feeling I know where this is going.
Yeah.
But tell me more.
Okay, so would you rather invest in the company leading the pack or the one that's struggling to keep up?
Right. Yeah.
It's a no-brainer, right? We want to focus on those companies that are outperforming their industry peers, both in terms of price performance and earnings growth. We're looking for the ones setting the pace, not the ones falling behind.
So how do we identify these market leaders?
Okay.
Is it as simple as just looking at which stock has gone up the most in the past year?
Well, there's a little more to it than that. One key metric is what's called the relative strength rating, or the RS rating.
Okay.
This compares a stock's price performance to all the other stocks in the market. An RS rating above 80 means that that stock is outperforming 80% of all other stocks.
Wow.
That's a strong indicator of leadership.
Okay, that makes sense. But it's also important to consider how they're doing relative to their direct competitors, right?
Absolutely.
Like a high RS rating might not mean much if the company's rivals are doing even better.
You need to look at the bigger picture.
Yeah.
So, for example, imagine you're looking at two electric vehicle companies.
Right.
The one with stronger earnings growth, higher RS rating, and maybe some more positive news coverage.
Mm-hmm.
That's likely the leader that you want to invest in.
Got it. So L is about making sure we're betting on the right horse in the race. Speaking of betting, let's talk about institutional sponsorship.
Okay.
Who are these institutional investors, and why should we even care what they're doing?
So institutional investors are kind of the heavy hitters in the market. Think pension funds, mutual funds, hedge funds.
Okay.
They have the resources to conduct really deep research.
Right.
And they move massive amounts of money. So when they start buying into a company, it can really impact that stock price.
So tracking institutional ownership can give us like a glimpse into what the smart money is doing,
Yes.
right? Like if we see a stock with a growing number of institutional investors over several quarters, that's a good sign.
It's a good sign. It's definitely a vote of confidence.
Okay.
These investors are betting on the company's future growth and profitability.
Mm-hmm.
But it's important to remember that even institutional investors can get it wrong, and too much institutional ownership can actually be a red flag.
Interesting. I wouldn't have thought of that. Like, why would heavy institutional ownership be a concern?
Well, think of it this way. If a stock is almost entirely owned by institutions and they decide to sell, even a small percentage of their holdings can flood the market with shares,
Wow.
which could potentially trigger a sharp decline in price.
Okay.
It's all about finding that sweet spot, significant institutional interest, but not so much that it creates a risk factor.
Okay, so we want to see them on board, but not crowding the boat.
Exactly.
Makes sense now. Onto M, market direction.
Right.
So I know it's important to consider the overall market, but how does that actually fit into the CANSLIM strategy?
Well, even the most promising companies, they can struggle in a bear market.
Yeah.
Imagine trying to swim upstream against a really strong current.
Right.
It's an uphill battle.
Yeah.
That's why understanding the market direction is absolutely crucial before you make any investment decisions.
So we're not just looking for great companies, we're looking for great companies at the right time.
Yes.
But, you know, reading the market can feel a little bit like reading tea leaves. Are there any like practical tips for gauging market direction?
Sure. There are some key indicators you can monitor. Keep an eye on those major indexes. The S&P 500, the NASDAQ, the Dow Jones, are they trending up or down?
Okay, so checking the overall market temperature.
Yes.
What else?
Look at moving averages. The 50-day and 200-day moving averages can give you a sense of those short-term and long-term trends.
Mm-hmm.
Pay attention to market breadth indicators, which basically tell you how many stocks are advancing versus declining.
Okay.
And, of course, keep an eye on the Federal Reserve's decisions on interest rates and monetary policy.
Right. The Fed can have a huge impact on the market.
Absolutely.
So if the major indexes are trending up and the moving averages are pointing in the right direction and the Fed is signaling like a healthy economy, that's like a green light for investing.
Generally, yes, a strong upward trending market is a tailwind that can really lift even good stocks to great heights. But remember, the market is constantly shifting. So being able to recognize those shifts and adapt your strategy accordingly is really essential. Okay, so we've covered all 7 letters of the CANSLIM acronym.
Yes, we have.
It's a pretty comprehensive approach to finding high-growth stocks.
Mm-hmm.
But let's get real for a moment. No strategy is foolproof.
Right.
Are there any potential downsides or risks to the CANSLIM method that we should be aware of?
Absolutely. One of the biggest risks is the volatility that's inherent in growth stocks. You know, these companies are often pushing boundaries and disrupting industries, which can lead to some rapid price swings.
Yeah.
You need to be prepared for a bumpy ride, and you need to have a strong stomach for those inevitable ups and downs.
Yeah, that makes sense. I've definitely experienced that roller coaster ride with some growth stocks in the past.
Sure.
What else should investors kind of be mindful of when they're thinking about this approach?
CANSLIM can be time-consuming. It's not a passive strategy. You need to be willing to put in the work.
Screening for stocks, digging into those financial statements, staying up to date on market trends, and continuously monitoring your investments.
Wow.
It's not for the faint of heart.
Right.
Or those looking for a set-it-and-forget-it approach.
So it's a more active style of investing. For someone with limited time, it might not be the best fit.
Right. It's important to choose an investing approach that aligns with your personality, your time commitment, and your risk tolerance.
Yeah.
But for those who are willing to put in the effort, CANSLIM can be a really powerful tool for uncovering those hidden gems that have the potential to outperform the market.
Okay, so we've laid out the foundation of CANSLIM. We've talked about the potential risks, and we've even hinted at how to put it into practice. But like, What are some practical tips for actually applying this method? Like, where do we even begin?
Okay, a good first step is to find a reliable stock screener. There are many available online, both free and paid.
Okay.
The key is to set your screening criteria to align with those CANSLIM principles.
So we could set the screener to find companies with at least 25% EPS growth, an RS rating above 80, and maybe some specific industry filters.
Exactly. You're essentially creating a custom filter to narrow down that universe of stocks to those that fit the CANSLIM mold.
Uh-huh.
Once you have a list of potential candidates, it's time to roll up your sleeves and do some digging.
Time to crack open those financial statements.
Precisely analyze their earnings reports, study their balance sheets, and get a deep understanding of their business model and their competitive landscape.
Okay.
Compare them to their peers. Read industry reports and pay attention to news and analyst coverage.
So it's not just about the numbers, it's about understanding the story behind the company and its potential for future growth.
Yes, you want to paint a complete picture of the company's health, its competitive position, and its growth prospects.
This is starting to sound like a full-time job,
Well,
but I guess that's what it takes to be a successful investor.
it's definitely a commitment, but it can be incredibly rewarding. Once you've done your homework, you can start building a watch list of stocks that meet those CANSLIM criteria.
Okay, so not jumping in head first, but keeping an eye on these companies and waiting for the right moment to invest.
Exactly. Patience is a virtue in investing.
Okay.
And that brings us to another really crucial aspect of CANSLIM, identifying those optimal entry and exit points.
Ah, yes, the age-old question of when to buy and when to sell. That's always a tricky one.
Right.
I imagine the CANSLIM method has some insights into that.
Well, Neil developed specific chart patterns and technical indicators to help pinpoint those buy and sell signals.
Mm-hmm.
He believed that stocks often follow predictable patterns.
Okay.
And by recognizing these patterns, you could increase your chances of buying low and selling high.
So it's not just about finding the right companies, it's about timing the market, too.
Yes.
Are there any specific patterns or indicators that we should be on the lookout for?
One of the most well-known CANSLIM patterns is called the cup and handle formation.
Okay.
Imagine a stock's price chart forming a U shape. That's the cup.
Uh-huh.
Then a slight dip and a period of consolidation. That's the handle.
Okay, I can picture that. And this cup and handle formation is a signal to buy.
It can be a very powerful indicator of a potential breakout.
Okay.
It suggests that the stock is gathering momentum and could be poised for a significant move upwards.
So we want to buy when the stock breaks out above the handle of the pattern.
That's the general idea, but
Yeah.
of course it's never that simple. You need to consider other factors like trading volume support levels and the overall market context.
Mm-hmm.
It's important to remember that chart patterns are just one piece of the puzzle, not a guaranteed predictor of future price movements.
Right, no crystal balls in the stock market, unfortunately. So
Yeah.
it sounds like we need a whole other deep dive just on chart patterns and technical analysis.
We probably do.
But for now, the key takeaway is that those entry and exit points matter.
Absolutely. Timing is a crucial aspect of successful investing, and CANSLIM offers a framework for approaching this challenge strategically.
Okay, we've covered a lot of ground here. We talked about the CANSLIM criteria, the potential risks, practical tips for applying the method, and we even touched on chart patterns. As we kind of wrap up this part of our deep dive, what are some key things investors should keep in mind?
It's important to emphasize that CANSLIM is not a one-size-fits-all approach.
Okay.
It's a strategy that may work better for some investors than others.
Right.
It's particularly well-suited for those who are comfortable with risk, who have the time and inclination to do their own research, and who are looking to actively manage their investments.
So not necessarily for the passive investor who just wants to buy and hold.
Exactly. And it's also important to remember that the market is constantly evolving. What worked for William O'Neill decades ago may need some tweaking and adapting to fit today's market dynamics.
It's not a static formula, but a dynamic approach that requires constant learning and adaptation.
Precisely so. Stay informed, keep learning, and don't be afraid to experiment and refine your approach as you gain experience.
That sounds like solid advice. Investing is a journey, not a destination.
Well said, and CANSLIM can be a valuable guide on that journey.
It really is a fascinating approach, and I can see how empowering it could be for investors to have a system like this to kind of guide their decisions.
Yeah, it certainly takes some of that guesswork out of stock picking.
Yeah.
It can give you an edge in identifying those companies with exceptional growth potential.
But as we've discussed, it's not about just blindly following a formula. It's about understanding the principles behind CANSLIM and being able to apply them thoughtfully and strategically.
Absolutely. You need to do your own due diligence. Consider your risk tolerance and be prepared to adapt your approach as the market evolves.
So for our listeners who are ready to take the next step and explore CANSLIM further, where would you recommend they start?
Well, I'd say the first step is to really immerse yourself in the CANSLIM methodology.
Okay.
William O'Neill's book, How to Make Money in Stocks. That's a great resource. It lays out the system in detail, provides tons of examples, and offers some really practical guidance on how to actually apply it.
Reading the book from the source himself.
Exactly.
That makes sense. Are there other resources out there?
Oh, yeah, definitely. There are a lot of online resources, articles, and even like CANSLIM-focused investment communities.
Oh, cool.
Where you can connect with other investors, share ideas, learn from each other's experiences.
Yeah, it's always helpful to have like a community of like-minded people to kind of bounce ideas off of and learn from.
For sure. And remember, practice makes perfect. So start by paper trading,
Okay.
which is essentially simulating those trades without actually putting real money at risk.
Right.
This will allow you to get comfortable with the process, test out your strategies, and gain some confidence before you actually start investing real capital.
That's a great tip, especially for someone who's maybe new to investing or the CANSLIM method. It's like a dress rehearsal before the big show.
Exactly. The key is to start slow, learn as you go, and gradually build those skills and knowledge.
So to sum it all up, the CANSLIM method is this really powerful tool for investors who are looking to uncover these high-growth companies that have the potential to deliver those like exceptional returns.
Yes.
It combines that fundamental analysis, looking at like the financial health and growth prospects of a company, with technical analysis, studying the price charts and patterns to try to identify those optimal buying and selling opportunities.
Yes. And while it's not like a magic bullet,
Right.
it does require time and effort and a willingness to learn and adapt.
Yeah.
But it can be a real game changer for those who are willing to put in the work.
So what are some of the key takeaways that you want our listeners to kind of walk away with today?
Well, first and foremost, remember that CANSLIM is all about finding those companies that are firing on all cylinders. Strong earnings growth, innovative products or services,
Okay.
a track record of outperformance, and a catalyst for future growth. Look for companies with limited supply and high demand,
Okay.
particularly from those influential institutional investors.
Right. Those are the companies that are likely to command like a premium in the market.
Exactly. And remember, timing is everything. Invest when the market is in a confirmed uptrend.
Okay.
And be really cautious when it's heading down.
Don't fight the tide.
Exactly. And lastly, never forget that CANSLIM is not a set it and forget it strategy.
Right.
You need to stay informed, monitor your investments, and be prepared to adjust your approach as the market changes. It's a dynamic system that requires your active participation and a continuous thirst for knowledge.
So for those who are intrigued by the CANSLIM method and are eager to learn more, we encourage you to really delve deeper into those resources that we mentioned.
Yes.
Read William O'Neill's book, explore those online communities, and start putting the principles into practice with some paper trading.
And most importantly, never stop learning and refining your approach.
Yeah.
Yeah. The world of investing is constantly evolving, and so should you.
Well, that brings us to the end of our deep dive into the CANSLIM method.
it does.
We hope you found it informative, insightful, and maybe even a bit inspiring.
Yeah, it's been a pleasure exploring this fascinating investing approach with you.
And to our listeners, we wish you all the best on your investing journey.
Happy investing, everyone.
Yeah.
I'd say the first step is to really immerse yourself in the CANSLIM methodology.
Okay.
William O'Neill's book,
Yeah.
How to Make Money in Stocks, is a great place to start.
Yeah, I've heard that's a good one.
Yeah, it really lays out the system in detail. Gives you a ton of examples, and it offers practical guidance on how to apply it.
Okay, so reading the book from the source himself
Exactly.
makes sense. What about like other resources?
There are tons of online resources out there,
Yeah.
Articles, and even like CANSLIM-focused investment communities
Oh, cool.
where you can connect with other investors and share ideas and learn from each other's experiences.
Yeah, it's always helpful to have a community of like-minded people to kind of bounce ideas off of.
For sure.
And learn from.
Definitely. And remember, practice makes perfect. So start with paper trading,
Okay,
simulating those trades without actually putting your real money at risk.
great.
This will allow you to get comfortable with the process and test out your strategies and gain confidence before you start investing real capital.
That's a really great tip, especially for someone who's like new to investing.
Yeah.
Or the CANSLIM method.
Absolutely.
It's like a dress rehearsal before the big show.
Exactly.
Yeah.
The key is to start slow, learn as you go,
Yeah.
and gradually build your skills and knowledge.
All right. So to sum it all up, the CANSLIM method is this like really powerful tool for investors who are looking to kind of uncover these high growth companies,
Yes.
the ones that have the potential to deliver those like exceptional returns.
Hmm.
It combines fundamental analysis,
Right.
looking at like the financial health and growth prospects of a company with that technical analysis.
Yeah.
Studying the price charts and patterns to identify those like optimal buying and selling opportunities.
Exactly. And while it's not a magic bullet, it does require time, effort, and a willingness to learn and adapt.
Mm-hmm.
But it can be a real game changer for those who are willing to put in the work.
For sure. Um, so what are some of the key takeaways that you want our listeners to kind of walk away with today?
Well, first and foremost, I'd say remember that CanSlim is all about finding those companies that are firing on all cylinders, strong earnings growth,
Okay.
innovative products and services,
Uh-huh.
a track record of outperformance, and a catalyst for future growth.
Makes sense.
Look for companies with that limited supply, high demand,
Mm-hmm.
particularly from those influential institutional investors.
Right. Those are the companies that are likely to kind of demand a premium in the market.
Exactly. And timing is everything. Remember that. Invest when the market's in a confirmed uptrend
Right.
and be really cautious when it's heading down.
Don't fight the tide.
Exactly. And lastly, I would say never forget that CanSlim is not a set it and forget it strategy.
Right.
You need to stay informed, monitor your investments, and be ready to adjust your approach as the market changes.
Mm-hmm.
It's a dynamic system that requires your active participation and a continuous thirst for knowledge.
So for those who are intrigued by the CANSLIM method and are eager to learn more, we really encourage you to dig into the resources we've mentioned.
Yes.
Read William O'Neill's book, explore those online communities, and start putting the principles into practice with paper trading.
Absolutely. And most importantly, never stop learning and refining your approach.
Yeah.
The world of investing is constantly evolving, and so should you.
Well, that brings us to the end of our deep dive into the CANSLIM method. We hope you found it informative, insightful, and maybe even a little bit inspiring.
It's been a pleasure exploring this fascinating investing approach with you.
And to our listeners, we wish you all the best on your investing journey.
Happy investing, everyone.